So that's the take coming as far as HDFC Bank is concerned. Sunil Subramaniam also joins us on the show right now. Sunil, hi. New Year's greetings to you, and New Year's greetings are clearly visible on the Lal Street with the kind of great momentum which is at play right now. It's coming in from the auto sector with big moves in Ayesha, Maruti, M&M, even TVS Motors for that matter. Would you perhaps join the party and buy the auto stocks?
I think so too, because I think this indicates that the festival season buying was good. Part of the sales you should account for because the December end products. From this month on, you'll start getting the New Year's products. So obviously, there would have been some amount of discounting. So we'll wait for the earnings season to see what is the level of discounting. But apart from that, I think the coming year with the fresh launch of EVs and SUVs will continue to harbor good times for the auto industry. And I think the sustenance of the K-shaped recovery. I don't see the K translating to a U or V yet, which means the high-end segments and all that will still continue to dominate the market, and I think auto will be a key beneficiary of that.
Right. So Sunil, curious to know what are some of the buy ideas that you've got for our viewers for 2025?
I would place discretionary consumption at the top of my pile, and it's a broader definition of discretionary consumption where I include consumer durables, I include auto, and I include realty. So this would be a top pick for me. The only part of the consumption part which I'm still hesitant about is the FMCG and the mass consumption pack. There, for me, the budget will be a key trigger. How far the budget tends to tilt towards populism through tax cut giveaways, bottom of the pyramid would mean the FMCG and bottom would recover faster. So I will stick to discretionary consumption, broadening it to consumption based on the budget. That's my number one pick. The number two pick would be the BFSI space. When I say BFSI, I'm not talking banks, I'm talking about the entire lending value chain of NBFCs, gold loan companies, small finance banks, PSU banks and private banks. But I also want to focus on the left-hand side of the balance sheet, which is the investment savings pool. So for me, asset management companies, insurance, both general and life, broking houses, market infrastructure companies, as well as wealth management outfits, all of them I see are good. Because I think it's a key year. I expect our per capita GDP to touch the $3,000 mark for the first time during the course of the year. As the GDP numbers come in and inflation numbers come in, as we know, it's the nominal GDP divided by the population. That I think if it hits 3,000, it means it augurs very well. And I think that the K-shape that we talk on the consumption side will also reflect, because the higher income people will also not spend so much, but will also save and invest a lot more. So I think that's the story for this year. For me, the two picks are consumption and BFSI right from the beginning of the year.
Consumption and BFSI, that's where you're sticking your neck out. But Naresh, what's the sense on cement as a space right now? Shree Cement is up 5%. You also have India Cements doing quite well. JK Cement is up. Ultratech is up in the trading session. Grasim, which is a bit of a play on the holding company, is also in focus. And there were channel checks that suggested that not only the December price hikes were well taken, there are further price hikes which have been taken in the month of January already to the tune of 5 to 10 rupees. On the charts, how does the cement pack look?
So, starting off with Ultratech, that's the one which would give a strongest indication once it sustains about 12,000. Apart from that, we are still in a sideways consolidation. The two names which really show a lot of strength is first is JK Cement, which is close to a breakout for the last 6 to 8 months. It has made multiple attempts around that 4,700, 800 mark. If that sustains, that should be the leader. Second one is Ramco Cements, which made that huge move from 900 to 1,050, which was the previous high, and it dipped a bit in the last few weeks. That could be a good entry point. Eventually, that could be a stock which could be the first one to go into new all-time highs. So out here, the structure is shaping up well for a lot of these names. Eventually, they'll break out sometime over the next few months. But the two names which could break out first could be JK and Ramco.
JK and Ramco Cement, those are the two stocks that Naresh is betting big on. Just taking stock, of course, cement is definitely a big mover today. So are financials. Even FMCG has actually made a comeback. But Sunil, what is your own take on pure play FMCG, staples that is, and whether or not they should be looked at right now, and has the correction played out duly?
I think I would wait for the budget, because I think that this budget will be a little more populist. I used the word development populism. And to the extent that they do that, so far the April to November, the fiscal deficit being at 52%, and if you see the capex year on year has dropped, but the tax collections year on year have risen. So it means government is fairly comfortable with this year's fiscal situation that might empower them to tilt a little bit towards consumption in the budget, given the fact there are two huge elections over the next couple of years in Bihar and Uttar Pradesh. That would be a trigger for me from the top line for FMCG. But in the same terms, the bottom line, see, food inflation, wheat prices are a key part of the FMCG pack on the margins part. So I would say easing of that inflation is important not only from a margin perspective, but at the top line also, inflation has been hurting the consumer surplus. So that's one of the reasons that FMCG related products consumption has been postponed. Now, if you see inflation easing, not only helps the FMCG margins, it will also help the top line by increasing sales. So inflation is the next key trigger to watch out for. And the third, I would say, part of the FMCG bottom line price is dependent on crude. So I think crude prices getting to ease with Trump coming and probably pumping more oil and talking down oil prices. I would say that's again be good for FMCG margins. So these three key triggers for me: the budget, inflationary trends, as well as the crude stroke food prices would take a call. So I'll probably wait a month, and the earnings season also will be well underway. The guidance from the FMCG companies and how they see the year is also probably a critical factor. So probably a little bit of a wait before I really strongly enter the consumption FMCG basket.
Guidance from some of the FMCG companies, but there is also the expectation that guidance from some of the IT companies might be high. HCL Tech and Infosys have been named by CLSA that they could be the candidates that might increase the guidance. We'll pull up the Nifty IT pack and actually individual names that I'm talking about, HCL Tech and Infosys, shortly up for you on the screen. Sony, what's your sense on the IT pack and what within the frontline IT names would you care to buy?
Sonia, IT is showing very strong support. Anyway, towards Infosys, one can see because it has given a very strong breakout today on charts, intraday charts. It has been adding very good positions on the longer side today. Plus, it has also given a very strong option chain breakout. So one can focus in Infosys. It is heading towards a 1980 to 2020 level. So that's a range that it can test from current levels. One can add at current levels and on any small declines up to 1940, keep a stop loss of 1920.
Okay, so that's the take coming in on the IT pack. But hold that thought. We do have Ravi Dharamshi's, take on consumption as a basket as well. Here are what he told us earlier.
Quick commerce is probably taking away a lot of that growth towards itself. So that is impacting the growth of the traditional distribution outlets. So that I think is what is ailing the consumption. However, there are certain pockets within consumption that you can see where there are signs of revival. Building materials segment, which is dependent on this real estate cycle, will start seeing an upcycle as well. So, and that is kind of a quasi-consumption place. Once you've done bought a house and then you're going to spend a lot on things that go inside a house essentially. So consumption is in a phase of transition. I won't say we are on the verge of a revival, but I think further deterioration should stop somewhere around here, and maybe stocks from a longer term perspective have started looking more reasonable than they have been in the recent past.
Okay, that's the take coming in on consumption and where that may be headed. Sony, what is your own sense? You think the likes of ITC, Unilever, etc. could see any comeback, or do you think this is a sector per se which is best avoided right now?
I think that story held on to till these December series, but then we've seen a change in the data pattern for the consumption space. So we've actually seen positions taking adding up on the longer side. There are stocks like United Spirits, then you've got Radico, you've got ITC, Asian Paints, which have actually shown a good movement in the first start of the Jan series. So I think the best over here would be to focus on in ITC, which has actually been looking strong on daily charts, and the stock is heading towards a 520. Slow mover again, but then that's the level to watch out for, and on immediate basis it has a good support of 475.
Coming in, any other top recommendations that you have for our viewers, Sony, in the sense that the BDSE trade even at the index level or any stock specific calls?
From index level, certainly I think Bank Nifty is looking like a good BTST. One can actually buy at current levels of around 51,600 and on ND declines up to 51,400. So this 200 points range for Bank Nifty is a good level to enter and initiate a buy strategy. It is crossing, it's at least approaching to cross above its major moving averages. The target for Bank Nifty would be 52,200 and 52,500. So by tomorrow, I'm expecting that it can actually test 52,200 odd levels. And from immediate levels, one can maintain a stop loss of 51,200. So look for BTST trade in Bank Nifty towards 52,200 by tomorrow.
Okay, Sony, great to have you on the show. Thanks as always for taking the time out. Naresh, let me come to you quickly for your BTST ideas too.
So that would be a buy on Concord. The stock looks like a case for a strong bounce back, deep correction done, multiple bottoms here. Stop loss at 780, target price of 810. Same as a buy on M&M Finance. We have seen good recovery today in the whole NBFC space. M&M Finance looks interesting, good volumes here. Stop loss at 272, target price of 285.
Okay, so those are some of the BDSE trades that one really needs to watch out for. But it's a very, very stellar rally that we have at our hands. I mean, 24,200 scaled quite effortlessly is at least what it seems on the screen right now. The fact that the mid-cap index is above 58,000, Sensex is up 80,000. That's something to really watch out for. But, Naresh, today it's clearly the large caps which are leading. I mean, there's a gain of 2% on Nifty versus small cap and mid cap, which is sub 1%. Do you anticipate that in the near term that's going to be a bit of a trend?
So we've been seeing this flip-flop in terms of the way one day we have small caps do well. So yesterday we did not see Nifty do well, but yesterday itself the small cap index had broken out of a 5-7 day range, very similar to that 24,000 mark on the Nifty. So today it's taken a pause, but if you pick up the last 3 sessions, they've both made a similar move in line. So overall, the structure is same. Given the lesser correction which small cap indices saw as well as hitting a new all-time high, the outperformance would continue in small caps. But in the near term, large caps could do better for the next few weeks at least.
But capital goods as a sector, would you bet on that, Sunil? Because there's a note coming in from Jeffries today talking about how the capex is again likely to be up in double digits in the budget. There's as it is a question mark whether the government will be able to spend the full capex amount or not. Some are calling that there's going to be a deficit of 10% in budget. Some people are calling it that perhaps they are going to be lower than 20% than what they had planned in terms of capex spend and the actual spend. What's your take on where capex and industrials are headed?
Brought in agreement that this year the government will find it hard to achieve the 11 lakh crore that they had budgeted. So you're probably going to see a 10% drop in the real estimates. And to then do a double-digit growth on the back of that is eminently possible. So the budget forecast will show a nice strong growth in capex. So this year they will fall short. But the capital goods story is not just about the government. I think it's time the private sector really came into play. And there, for me to really invest in the capital goods segment, of course, the budgetary forecast is important, but I also like to see the broad consumption pick up. So this K-shaped recovery means that high value goods, which are low on quantity terms but high value, are the ones driving the consumption story. So the capacity utilization is not greatly breaking out from the 75, 76, 77 levels. So if the budget has a little bit of populism, you see consumption revival happening at the bottom of the pyramid, then capacity utilization will step up, then the private sector capex in the last quarter could step up. So the consumption trigger, right, the track on the consumption volumes is a key driver to decide on the cap goods cycle. So I would say partly on the budget, partly on the mass consumption growth would be the time to get into the cap goods cycle. So keep those triggers in mind and watch it and then invest in that.
Right. Sunil, just an extension to one of the themes which has worked very well throughout the year, and that's been the capital market theme, right? I mean, be it an Angel One, a CDSL, PSC, the entire pack held out very well. Do you think that's going to be the case going forward too?
I think so. I think there's a huge potential there which has not been tapped. Look at the mutual fund penetration. Yes, you have 12 crore stock market investors, but on a 140 crore population. And the encouraging part there is increasingly the wealth mix as well as the market purchasing is moving to the tier 2 and tier 3 towns, right? Thanks to mobile penetration and the news flow. So I think that's a huge story. We've just got the beginning of the cycle last year. Yes, the market has discounted a lot of the growth. So valuations probably are a little bit on the higher side. But if you stick with it for the medium term, I think capital market related plays are a huge, big story up move for India. And I think we should stay invested in that.
In the meantime, let me take it across to my colleague Ria, who's joining us to talk to us about what the industrial outlook is for the year 2025 as per Jefferies.
Well, yes, so Jefferies has come out with a note outlining the industrial outlook for 2025. What they've said is that the election result was a negative surprise with the BJP coalition coming in versus the standalone majority that we were expecting earlier. In terms of the order inflows, the flow growth has tapered off post-elections, and investor concerns have increased in terms of growth and valuations that have emerged going ahead. BJP's Maharashtra election majority has actually allayed some concerns, and the budget going forward will be a decider on government capex, how it's going to continue going forward. They do remain constructive on the sector, but power and defense stand out in terms of the industrial sector. The top picks remain Siemens, HAL, Thermax and L&T. For HAL, the target price is rupees 5,500. For Thermax, it is rupees 6,100, and for L&T, it is 4,600, and they've maintained their buy rating on all of these stocks.
That's Jeffrey's take on where they see the entire capex theme emerging. And in continuation, Sunil, with what you were talking about, capital goods, defense, railways, and especially budget-sensitive kind of sectors such as these, where do you think they're going to head in the next quarter or so?
I think they're going to be consolidating. Because see, honestly, for the government, if they want to reallocate a little more towards the mass consumption, maybe give a little more tax cuts to the middle class, that money has to come out of somewhere. And I think defense is not a critical expenditure. Now, power is something that they've already invested in. They'll continue, but it's the private sector power that has to pick up. It's not so much of a government, driven for this budget. So I would say that if at all a knife comes down in the mix between revenue expenditure and capex, on the capex side, it will come on these things which are not critical. They are important for the country, probably not urgent. So, whereas the government would try to push more employment-oriented capex, more development, populist-oriented capex kind of thing, like rural irrigation, and those kind of sanitation and water and all of those things. So, I think defense and power, I would rather again wait for the budget to see the fine print and then take a call. Because while valuations have corrected since the peaks of September, they still are fairly rich, I would say. So, hold off, I would say, for the budget to get clarity. You wouldn't lose much. There will be a consolidating phase, and then take a fresh call on defense and power and railways and all of those government-related capex items.
And then the budget, I think Prakash was just tracking a meeting which was going to happen at the North Block, wherein a lot of capital market participants were going to join, and they were going to propose to the government as to what their expectations are from the budget. If we do have Prakash, maybe we can take it across to him. Prakash, tell us what exactly is on the agenda, who's attending?
The finance minister in her pre-budget consultations in the industry will meet with the representatives from the capital market and financial sector today. Various recommendations will be made before the finance minister just ahead of the union budget. We're given to understand that the reforms related to financial sector and the capital market will be the focus. In fact, demands may be made to provide incentives to increase infrastructure credit and deposit growth going forward. Along with that, the financial sector is likely to seek operational incentives for sunrise sectors. When it comes to capital market, we are given to understand that the industry is likely to seek tax relief to reduce transaction cost in the capital market. In fact, rationalization of STT and CTT will be sought to reduce a tax burden on investors. Along with that, we are also given to understand that the representatives of NBFCs will seek relaxation in compliance requirements to spur growth. In fact, demands related to cyber security and digital infrastructure are likely to be made for the capital market and financial sectors.
Okay, that's what we're anticipating from the capital markets meet in the likely pre-budget meeting with the finance minister. Let's just revisit how we're settling down for the day and what a Thursday it's turning out to be. Finally, seems like everyone's back to business and you are seeing quite a good move. 385 points up in the green and still counting upwards. It's 24,283 on the Nifty futures as we speak right now. iShares, Bajaj Finance, Maruti, M&M, these have been your biggest contributors to the move today. And it's surprisingly coming in at the hands of relative underperformance from names like HDFC Bank, ICICI Bank, of course there's DRL, Cipla, and to think of it, Pharma was the one which was actually the safe haven the past couple of trades, but that's the one which is a little bit of a laggard. But Naresh, given how we are winding up for the day, what levels would you now look out for and what do you anticipate trade will be like tomorrow, particularly for Nifty Bank, Nifty Auto and of course the Nifty 2?
So we could see a little bit of a fade off in Nifty Auto, and that could be a buying opportunity in some of the names. Nifty Bank could be the one which could break out tomorrow, so expecting some more follow-up action on the Bank Nifty. And Nifty continues to be on track for a move towards 24,400, 500. So Bank Nifty could be the trade for the next week.
It could be the trade for the next week. Just watching out for that one. 3 minutes left to the closing sessions, and I guess a lot of the bulls would be saying today why the markets are closing at 3:30, given the fact that the momentum has been really strong. We're at the highest point of the trading session right now. Possibly we can scale up 20 more points to hit that 24,200 yet again. We did manage to hit that on an intraday basis. The real star performer today